Welcome to this week's Energy Market Wrap from Enverus. Let's start off with U.S. upstream. Diamondback reported faster drilling and completion cycle times, with average spud to total depth near 8 days, and Midland Basin well costs trending lower year over year, while planning to grow volumes this year on a disciplined capital program. The company also secured additional takeaway to manage rising associated gas exposure as second benches make up more of the program. Chord leaned harder into 4-mile laterals after double-digit cost reductions and strong tracer data across the full lateral, with about 40% of turn-in-line wells this year expected to be 4-milers. The company is scaling simul-frac operations, dual fuel, and continuous pumping to extend efficiency gains. Expand Energy pushed Haynesville break-evens down roughly 15% since late 2024 and sees well productivity increasing again this year, helped by vertical integration across sand, water, and rigs. The plan calls for 7 rigs in the Haynesville and additional activity in Appalachia to support a constructive multi-year gas demand outlook. Diversified Energy agreed to acquire East Texas gas assets for $245 million in cash, adding low-decline production, substantial reserves, and contiguous acreage to its footprint, with financing expected to transition to asset-backed structures after close. On to international upstream. Equinor-BP signed a benefits agreement with Newfoundland and Labrador that advances the Bay du Nord deepwater oil project toward a potential final investment decision next year, targeting a phased development with a high-efficiency floating production, storage, and offloading vessel. In Southeast Asia, Conrad sanctioned the Mako gas development offshore Indonesia, a 2-phase project starting with 6 wells tied back to a leased mobile offshore production unit and capacity of roughly 172 million cubic feet per day, with first production aimed for late 2027. In the midstream sector, following regional attacks and security deterioration, QatarEnergy temporarily shut in liquefied natural gas operations and declared force majeure, with shipments through the Strait of Hormuz sharply curtailed as facilities and industrial hubs sustained strikes. Market sources suggest at least weeks to normalize exports, underscoring near-term fragility in global gas trade flows. Closer to home, Targa Resources will build another Delaware Basin gas plant and a new Mont Belvieu fractionator, adding meaningful processing and natural gas liquids capacity over the next 2 to 3 years as Permian inlet volumes and dedicated acreage continue to rise. In oilfield services, Flowco acquired Valiant Artificial Lift Solutions for $200 million, adding electric submersible pump capability to its production optimization portfolio and positioning the company to support lift solutions throughout a shale well's lifecycle. We wrap with renewables and power. A consortium led by Global Infrastructure Partners and EQT will take AES private in an all-equity deal valuing the utility at $10.7 billion, a move aimed at unlocking capital for grid, generation, and data center-related growth while maintaining local utility operations. Keep your finger on the pulse of the energy industry with Enverus publications. Our experienced writers cut through the noise and deliver insights that help you stay ahead of the curve. To learn more, reach out to business development at Enverus.com or visit www.enverus.com. Thanks for listening.